Good morning and welcome. We will get started with today's boot camp session in just a moment. Thank you for joining us this morning. We will get into today's topic in just a moment. All right, well, good morning and welcome to this Tuesday, March 8th session of the Arizona Commerce Authority Small Business Boot Camp. My name is Faith Ritchie and I'm the Small Business Programs Manager here at the ACA, filling in for usual host, Robert Theobald. As always, at the start of these presentations, we always like to give acknowledgement and thanks to our many community partners who have made this series possible. Now, the Small Business Boot Camp was formally designed to assist small businesses of less than 20 employees return from the COVID crisis stronger than ever, but it continues to provide content to assist small businesses prepare for success, plan for the future, and grow a thriving business. It continues to be a statewide initiative supported by our amazing network of community partners and hosts a content library and newly added workshop series of extended topics. Now, the content library is a collection of more than 200 recorded webinar sessions covering different topics, strategies, and tools to assist entrepreneurs and businesses succeed. Additionally, the ACA has other services and resources available to assist the small business community throughout the state. So whether you are looking to start, grow, or scale, there may be additional resources available to you. For information regarding these programs, more about our small business services, Arizona at Work, and the Arizona Manufacturing Extension Partnership, we encourage you to visit the Arizona Commerce Authority's webpage. Now, speaking of looking to start, operate, and grow in Arizona, the ACA also hosts the Small Business Checklist, which is an interactive online guide to help answer all of those commonly requested licensing questions for local, state, and federal levels. In addition to the checklist, we also have included a chatbot here, Sally. And so if you are looking for additional information and going through that checkbox, we also encourage you to check Sally out and let us know if she was able to answer your questions directly. Now for some quick business updates and some reminders for many of you. First, we encourage all of our attending small businesses to acquaint yourself with the Small Business Administration's website. Their website is full of rich information and insights available that can benefit your business regardless of stage. Additionally, as many businesses look to start and grow, we encourage entrepreneurs to take advantage of the many different business support programs available across the state. And as always, these links will be shared with you in the chat so you can get additional information or schedule those appointments if you'd like. For PPP loan forgiveness, do not forget, if you are a small business that received a PPP loan, you must file for forgiveness. Now, luckily, we will be hosting a small business boot camp about PPP forgiveness next week. So we encourage you to join in that session to learn more about that process, but we have also hosted some additional sessions regarding PPP forgiveness, and you can always review those in the content library. Lastly, for our business updates, in partnership with the Governor's Office, Envision AZ, and Startup AZ, the Emerge AZ FAST Grant Round 2 application is now open. So if your startup has a product in market, has been in existence for at least 12 months, and has 5 or more employees, you may be eligible. So we encourage you to check out that link and web page also shared in the chat for more information about the program and application. Now, as mentioned, our upcoming bootcamp sessions next week, we will be joined by Prestamo CDFI to talk about the PPP loan forgiveness program. We will then revisit the topic of the business model canvas. Tom is our presenter for this, and he did a fantastic job way early in the boot camp. And so we're happy to have him come back and really dig into this topic more so. A new topic for the boot camp will be for Tuesday, March 29th, leveraging influencer marketing. So we're really excited to add this conversation to our content library and to host it on the boot camp. So if influencer marketing for social media is something that you and your business are interested in, this is going to be a great session for you. And lastly, part of our workshop series, we are so excited to add this to the calendar. But we will be doing a session with the Arizona Department of Revenue to talk about all the ins and outs of transaction privilege tax. I know we get quite a few questions about this topic, and so we're happy to really host this conversation. This will be a 2-hour presentation, so I'm sure we will get all of those questions answered. So if you have concerns, questions about the TPT, we encourage you to register for that upcoming workshop on our website. Now, why we're all here to talk to us today about valuable tax incentives from the Research and Development Tax Credit Program, we are happy to welcome back Acenas Consulting's Tiffany Bisconer. So Tiffany, thank you so much for joining us again. I will go ahead and stop sharing my screen, and the time and screen are now yours.
I don't know if you want to do that. That might be dangerous. Thanks so much, Faith. And every time I jump on these things, I learn more and more about what the AC is doing. And even though I'm pretty intimately involved with a lot of the programs, I just get excited. So thanks for doing all that you guys do. I am going to attempt to share as I did in practice and see if it works. Right, are we good?
It looks great.
Okay. All right. Well, thank you everybody for joining us this morning. Faith, a small suggestion, maybe when we do the boot camp next time, we can actually start with some push-ups or something, because I feel like every time I hear that, I'm ready to go. So I will not force everybody to go on camera and show me their push-ups, but maybe next time it'll be fun.
Next time.
No, but I really appreciate everybody showing up, taking a minute out of their day, and really I'm here for you. So as I start going through just the educational portion of what I'm going to talk about today, if it triggers any inspiration or questions, feel free to throw some stuff in the chat or jot it down for when we get to the Q&A. As much as possible, having a conversation about this topic to me is exciting. So feel free to interrupt at any point in time, and we'll try to manage the incoming as best as possible. So thanks, Joshua, too, for your help in that. So the main thing that I wanted to start with, just from my background, to make sure that you know who's vomiting all over you with words today, is I am a CPA, but I do specialize in this area of R&D tax credits, and I have grown and scaled my own businesses and also been in private industry and public accounting. So a lot of the reason I focus in this area is bridging a gap of knowledge to make sure business owners of all shapes and sizes in all industries kind of have the insight on how to apply things as complex as the tax code to the things they're actually doing and struggling with in business. So for me, that is my passion and purpose. So I'm really happy to be here talking about this specifically. All right. So the idea of R&D, it's interesting to me having thousands of conversations surrounding this topic, because typically the first thing that I'll hear when people kind of come up with the research and development conversation is they don't think that they are doing it because we have an internal bias on what real research is supposed to be or what real research and development is. A lot of people associate it with the medical or pharmaceutical or somebody in lab coats doing direct science work with beakers. And really the idea is in business, especially today and continuously, that the basic pressure to survive as a business is something that usually lends to some kind of innovation internally within your business that is going to drive you forward, make sure that you remain relevant, and sometimes make sure you even remain in business. So the challenges you guys face as business owners or anybody going into starting a business, the challenges are real, the competition is real, and the actual innovation happens when you get faced with a challenge that you need to come up with some kind of novel solution for. So I want to start hopefully with everybody on the line, just keeping a really broad mind on what R&D is, and then we'll kind of dive deeper and deeper into the micro details, but first start with a clean slate and we'll kind of go from there. So this idea that you need to continuously transform to stay relevant is going to be at the heart of what I talk about. So I kind of wanted to start with just a couple case studies. The main thing that I want to point out is the R&D tax credit is not an industry specific credit. It's really related to the actual activities and the things that you're doing under the hood of your business. So when we talk about size of business, a lot of people also think that R&D claims are primarily for large businesses. And even though those are often the drivers of the credit, and kind of initially when this came out, the first folks that were kind of diving in were the huge businesses. Where we're at right now with the tax code and with the application of R&D, it's really across the gamut. It can be a startup business that is in a space of even no revenue. It can be a middle and small size business, and it can be the huge businesses that are claiming the credits. So one of the companies I work with was an AV company. I like to bring this up too, because audiovisual companies and the type of work that's being done isn't always initially thought of, again, as R&D. So from their perspective, the size of the business was about 15 million in sales. And the work that they were doing internally was a lot of design, system design. So being able to implement and integrate audio video distribution in a number of conference rooms. And they were faced with a lot of unique problems when it came to getting things to play together well. So anybody in the tech space knows that oftentimes for building a system, there's not a real plug and play solution. There has to be a lot of engineering and work done on the back end to get things to work together properly as a whole group. So for them specifically, we were able to pull out about 1.4 million in labor, and on the materials side, about 18 grand. So those are just two expense classifications. And out of that, the weight of the credit was about 108 on the federal side, and Arizona about 161. So total benefit there is over 270,000. So not a small chunk of change. And then on the other side, just because I like to show the contrast here too, through the ACA and through different incubators locally here in Arizona, I work a lot with startup businesses, both as a mentor and also with this program. So a lot of businesses that I'll enter into this conversation, I try to start as early as possible, because the moment you start to spend on building something, even if you're pre-revenue, there may be an opportunity to claim a credit. So this was one of those examples. This was a software company, and they were pre-revenue, just meaning that they didn't get anything yet because they're actually still in development mode. They only were established about a year ago, and they were developing a platform. So in the process of building their MVP, obviously somebody had to be doing that work. So in their perspective, they actually were able to get some grant funding and some investment. to spend on employees, some engineering staff, and some developers. So their labor came out to be just under 500 grand. The independent contractors were about 250 and their materials were about 11.5. So out of that, the federal payroll tax credit. So again, I'll kind of break into this, but they didn't have income tax because they didn't have any revenue, but they did have payroll taxes. So this is an option based on their stage of growth to offset payroll taxes instead. So for them, that came into about 53 grand of payroll tax offset. And then the Arizona refundable credit is something that is an option here, which is another reason I love working in this state and working with the ACA. The Arizona refundable credit, which means a check back, came into about 60 grand. So in both of those scenarios, two different sizes of business, two different types of focuses, both were able to get some benefit at the stage they were at. So the main question here, and maybe you're putting some of the pieces together already, or maybe you already came in with some ideas. The idea is your business actually doing R&D. I try to zoom out again in a very high level and then go into details depending on things that are very tangible that you're doing as an individual in your business as well. But the general idea is if you're trying to make either your products, your processes better, faster, cheaper, if you're finding ways to build efficiencies, do things differently, and you're needing to utilize some kind of technical skill to do that, that's kind of the initial part of our conversation when we dive into the qualifications. So again, this idea that the future belongs to those who learn more skills and combine them in creative ways. For me, the space of innovation and combining the idea of both creativity and technical skill is something that most business owners and entrepreneurs take for granted that they're actually doing. Because in order to create ideas, needing to come from a foundation of skill is usually the initial point. And then how do you put that skill into different areas, like building new product, building better processes, identifying issues so that you can stave off a potential failure in one of your business components. All of these things kind of on a daily basis, or for most of the business owners I talk to, is what is kind of keeps you up at night, right? It's that continuous wheel of how can we do this better? How can we stay relevant? How can we make sure that we're using the resources that we have in the most efficient way? How can we do better by our clients or our customers? All of these things lead to questions that will then usually initiate some kind of change or focus in your business that can bleed into R&D. Okay, so this is a little bit of the boring side, but I want to give some foundation on what I'm actually talking about. So the first thing I want to chat about is just the R&D tax credit program at the federal level, because this isn't something that is new. It's been around for over 40 years. So if you can imagine, anything that's been around for that long has gotten beat up a bit. Same goes for the R&D credits. So for 40 years, imagine where we were at in 1981. The reason for the credit is still relevant today. And a lot of what I usually try to frame this as is the government had a real desire to help incentivize US-based businesses, and also kind of a selfish intent to make sure that we were trying to retain some of the spend from US-based businesses in the US. So the idea is to incentivize businesses who are spending on employees that are here, independent contractors that are here, and keeping the money basically within our economy so that we can compete at a global level on that level, as well as on an overall general innovation level. So to try to get businesses to do innovative things, to try to get businesses to take risks, to make things different and better, was kind of the purpose of the credit, and still remains the same. I would say just back at the beginning, there was different and stricter qualification standards that typically lended only big businesses to take the credit. On top of it, it wasn't actually a permanent part of the tax code until 2016. So kind of until that point, anything that people weren't sure was going to be around for the next year, it was harder to put investment in claiming credits that you weren't sure if they were going to actually be around for the next year when you wanted to claim. So at this point in time, it's a permanent part of the tax code. That was something that was passed through the PATH Act of 2015. And during that time, 2015, when the PATH Act changed, it also became a lot more relevant for small businesses, startup businesses, and pre-revenue businesses. So even though this is a federal program, the idea is every state kind of has its own buy-in to federal programs. And I can definitely proudly say that Arizona is one of the best states in the nation when it comes to supporting and incentivizing Arizona-based businesses with this credit and a bunch of other things, but with this credit specifically, it is one of the best in the nation when you come down to the state level credit. So it is something, no matter where you do business, you can take it at the federal level. And then depending on where you're filing at a state level, depending on where your operations are at a state level, different states will have different rules that either include an R&D tax credit or don't. But for Arizona and the ACA specifically, there are some programs here that really aren't available in any of the other states, which is cool. And I mentioned this at the beginning, but I'm going to double down. This is something that is available to all industries. There really isn't an exclusion for any type of industry. It's really just based on the type of work being done. Okay, so getting a little bit more into the nitty gritty of this, when we talk about you qualifying specifically for the R&D credit and what leads you to be able to qualify, the initial part of that qualification test is what the IRS calls a 4-part test. So it's just a battery of 4 different questions or 4 different concepts, basically, that we then apply to the different projects, activities, initiatives, work that you're doing inside your business to see if they can kind of check those boxes. Obviously, under this, there's a lot more complexity, but at a very high level, this is the starting place. So just understanding that the first idea is you have to be creating some kind of business component. And at its base, this is just you having an intention of building something that's intended to be for sale or use by a customer or client or third party. This can be a new or improved software, product, technique, formula, something that you're basically intending to create and at some point potentially have it available for a third party. The reason why the intention word is important, if anybody knows tax law just in general, you can go down a path to try to get this to work. And if it doesn't, if you don't succeed, success is not one of the requirements. So just the attempt, the spend, kind of going out on a limb to see if you can make something better, that's really what's important. Obviously, internally as a business owner, you hope to succeed. But for some of those projects that you go through and they don't actually making it to the finish line for one reason or the other, it doesn't preclude you from taking the R&D credit. Okay, so that first test is the business component. So we'll identify as a new or improved process, product, technique, software, invention. And then when we move into identifying what that is, say it's a new software. So we'll go into now, okay, what were your technical uncertainties at the beginning of the process of kind of diving in? So from a technical uncertainty place, very simply put, is just what questions were you trying to solve for? What questions were you asking? What challenges were you trying to find a solution for? So kind of when we dive into that, that can be the overall purpose of the initiative, what it was that you were building. It can be some of the micro details on, what coding language are you going to use? What kind of platform is necessary? What kind of integrations do we need to create here in order to make it accessible? It can be micro details or larger details, but we want to make sure basically that you didn't go into something having a complete recipe and no process of experimentation for. I've never seen that in business, but if anybody has some secrets, please let me know and send them my way. So really, those are just kind of your questions up front. And then a process of experimentation, again, doesn't have to be in a lab. What it is really is what kind of alternatives did you look at in order to either get to an answer or get to the point of failure. So it is kind of that loop of asking questions, finding different ways to kind of address those questions. You may get lucky and look at a few alternatives and the first one you try is the right one. You might go down a rabbit hole of just continuously trying to get something to work and then getting to the point where you finally got something after 75 iterations. But the idea is from the technical uncertainty part and from your process of evaluating alternatives, this is really where the looping process is of R&D. So from a technical uncertainty standpoint, there's kind of 3 primary ways that we would identify an uncertainty. Again, this can be related to your uncertainty on whether or not you have the capability of doing something. It could be something so far-fetched that you don't even know if it's possible. Or it could be something, it can be done. You're just not sure of the best way to do it. So it can be uncertainty related to design or uncertainty related to the method. Most of the time, one of those two is what we're going to dive into, because most people know that it's probably something that can happen. You're just not sure how. So for the experimentation, this can be an iterative process. This can be an evaluation of one or more alternatives through trial and error. This can be the scientific method. It could be just the identification of how you went about looking at different alternatives to come to a solution. So the fourth test is related to scientific principles. And this one is really important only because some of the things that we do in business will not meet the 4-part test just because of this part. So that process of experimentation is required to be grounded in the hard sciences. So engineering, computer science, biology, chemistry, physics. It doesn't mean that your business has to be a hard science business. It just means that those principles are utilized in your process of experimentation. So I want to make sure that that's clear too, because, for example, building out a software product, you're going to go through a process of experimentation and you're going to rely on the principles of computer science. You also might rely also on the principles of engineering. And then depending how you get to the point of starting to build something, you may have some back-end knowledge in biology or chemistry or things that you're utilizing in order to kind of drive that process of experimentation. So that just needs to be identified as well. Like, for example, kind of an offshoot one like breweries, obviously the back end of getting things brewed is going to be relying on the principles of chemistry. There's also a lot of interesting things that happen with tangible product development. So obviously the engineering side will guide a lot of that. So, okay, so the kind of grounding points for what we just talked about with the 4-part test, that's kind of be what we kind of guide the qualification process related to each project. Obviously, internally, you may not call things projects. It's just kind of course of business, things that we're always doing to make things better. So we just kind of identify, okay, what were some of those initiatives? What were some of those focal points? What were some of the things that you needed to do to get to that point? So when we talk about that process of R&D, I just want to make it clear too that the initial starting point is really based on your ideation. So it's based on concept inception. It's based on, maybe you having a conversation with a prospect or a client and then bringing to you something that they're either upset about or they would really love to see in the product that you offer. Kind of that initial spark that leads you down a process of now trying to design, napkin sketch, kind of flesh out what it is that you need to be doing in order to address that. Or it can be one of those things that, like I mentioned before, a lot of the entrepreneurs I work with, myself included, my brain never stops. So it is one of those things that you're perpetually thinking of new ways, new things, new ideas to make things better. So the moment you kind of grab onto something and start down the path again of doing napkin sketching, start initial design work, you may bring it all the way down through your actual process of experimentation, starting your prototyping, starting the design engineering, evaluating different options to make it better and better. And then the clock for R&D doesn't stop until you get to the point where you actually alleviate your technical uncertainties. So again, technical uncertainties go back to the questions you're asking. So when you get to the point from a technical perspective, you now don't have any more questions. That's basically when the clock will stop. And as I mentioned before, that can be either when you toss a project because it wasn't working, or you go into commercial production. So with the example of, say, a software product, obviously, if anybody has any software in their life, which I'm assuming all of us do, you know that as soon as a version gets released, the minute, hour, day later, it's right back to the drawing board and there's continuous development being done. So you're never really finished, but this initiative or this part of it would be finished. Another thing I just kind of wanted to clarify as well, when we talk about technical uncertainties, we are talking about like the functionality, the durability, the actual build. Obviously, once you get into commercial production and you go to market, there's a whole go-to-market strategy. There's a whole market research part that is actually not something that is included in the R&D timeline. because that type of market research is actually explicitly excluded from what we can pick up from time and investment. So understanding the plight of an entrepreneur and understanding that that is a really important piece. I just want to make sure that there's a differentiation between that, which the IRS kind of considers like the soft science part, figuring out if people like stuff, figuring out how you're going to sell it, is not a part of the heart of what we're talking about today. Okay, so again, this is designed to incentivize you to take risks, both financially and with your time, to build something that's better. So the idea is the innovation comes with creativity and technical expertise. It doesn't matter if you can succeed, it just matters that you tried. Okay, so if we get to a point where you realize, okay, so I am doing a bunch of R&D, there's a lot of stuff here that I'm doing that sounds like, you know, what this lady's telling me I might qualify. Basically what ends up happening is we're limited to 3 basic buckets of expenses that will drive your credit. So from the perspective of what actually gets pulled into like the credit calculation grinder, there's going to be wages, contract research, and then supplies. From a wage perspective, that's US based labor. And actually all of these expenses, the idea is it has to be US based or US sourced, because that's going to be kind of the whole purpose of the IRS's program in the first place. When you talk about the state level, the sourcing is going to be related to where that human is or where those source expenses are based on the state. So from the wage perspective, you're looking at 3 different levels of human involvement. Again, in that timeline of concept inception through commercial release. It's going to be the actual direct technical work, which typically is the most obvious of it, right? The engineers, the software developers, people that are involved in the project from a technical perspective. But we're also able to pick up 1 level above of direct supervision and 1 level below of direct support. So when you look at, again, the humans touching the project throughout that timeline, there's 3 levels that we're able to pick up and drive the credit off of. Same goes for contract research. So independent contractors or consulting firms that are involved in the process of, again, ideation, experimentation, building the thing. We want to make sure that we look at those too. I will say a small caveat on the contract research is if anybody on this call is looking to hire developers or hire outside contractors, I'd love to have a conversation around that to help set up some parameters. A lot of times, the things that will throw out your ability to pick up this cost as a qualified cost are actually related to the contracting terms and payment terms of the independent contractors that you hire. So depending on if they're a flat fee or time and material, that will really impact the IRS's definition of who in that relationship is at risk and who has the right to claim the R&D. So that's a deeper conversation, but I just want to bring it up because that is another thing that makes me cry myself to sleep when it's too late to make a change. Okay, so contract researchers, same thing. It's the humans involved throughout that timeline. And then on the supply side, this is most relevant to anybody creating actual tangible prototypes. So it would be your tangible, non-depreciable items that are kind of burned up in your process of experimentation. If you're building prototyping, if you're building out actual hard products, this is something that can be really relevant. It's also like in the brewery example I gave, or like supplementary companies that are building out supplements, there's going to be some testing involved and some material that's used, raw material that's used in that process. So those are kind of the things that we want to dive into. And then on the software development side, there's another kind of subcategory that's related to computer rental costs. So here I've seen like AWS or Amazon Web Services, those kind of costs range from pretty insignificant to like mind-blowing. So depending on what kind of development work that you're doing, that would be for the actual space used for development, and we can pick up some of those costs as well. So one thing I did want to mention is just to set a foundation, because sometimes the word tax credit or credit and deduction might get mixed up or appear to be the same thing. So I kind of want to just make a quick determination on the difference between the two in case anybody in the line usually blanks out when anybody start talking tax. So when you take a deduction on your tax return, it's a reduction of your top line revenue. So revenue less your deductions is kind of lead to your taxable income. When we're talking about tax credits, it's actually a dollar for dollar reduction of the tax that you need to pay. So where a deduction just decreases that top line revenue and you're still going to get hit with tax on that bottom net taxable income, the tax credit will take that, tax liability. So if you owe 10 grand and you have a 10 grand tax credit, basically you're not going to pay taxes. So the weight of a tax credit is much heavier than the weight of a deduction. And then the extra cool part about the R&D stuff in general and some of the tax credits that you're able to get is you get both. So you're still going to get the deduction for the expenses that we're driving the credit off of. And then on top of that, you're getting an extra benefit to be able to reduce your tax liability. So I just wanted to make sure that was clear because it isn't, sometimes I'll hear people say, well, I'm already getting an expense for it. And that's true. It's gonna go through your tax return, but then on top of it, you're gonna get an extra benefit, which is the extra bonus of that. And then obviously the dollar for dollar reduction in the actual tax paid. And then I did mention this a little bit, I slid it in at the beginning, but typically a tax credit is gonna go against your income tax. So if you're not paying income tax, there's no real use for a tax credit. But what the PATH Act of 2015 did is actually allow businesses to claim an election to offset payroll taxes as opposed to income taxes when they're in that phase of growth where they don't have income taxes yet. So this is a really great for a fact pattern of, you started a business, maybe you self-invested or you got some money from investors. You started making payments, maybe hired a couple of key employees to be able to build something for you. That some of the rules related to the payroll tax offset is just starting like kind of within that 5-year period of when you received your first gross receipt. So if you open a business, you just started, you're within the first 5 years of claiming your first gross receipt. This is an option that you can elect on your tax return to take that tax credit and use it against payroll taxes moving forward, instead of waiting and carrying it forward to use against income tax. So again, if you have payroll, you don't have income yet, or you have very limited income, this can be an option that is more of an immediate benefit than waiting to carry forward into future years credits and in hopes that you'll get to the point of huge revenue later. So this is something that can be evaluated each year. And it's one of the things that is kind of used, in my opinion, at very critical stages of growth when you're most vulnerable and you have most of the spend out the door, but you don't yet have either an MVP or a product out. The other thing that I like to talk through, being somebody who's very proactive and understanding that planning is important, it's also a strategy. So being able to utilize R&D tax credits and understanding what your return on spend that you're already spending on in your business, understanding what that return is going to look like, it really does help to focus intentional investment in the things that you're doing. For example, some of the software companies I work with or engineering firms that I would work with, they realize, okay, so I'm getting 80 grand of tax credits. That's basically a whole new engineer that I can hire to do this project that I've been trying to do for a long time. So it's kind of cool because obviously getting that either the cash back or stopping the cash from going out the door is going to be able to be reallocated and put right back into the business to build something even better. So for me, that's exciting. For most business owners, that's exciting too, because even though cash is exciting on its own, getting that back, keeping it in your business, being able to really identify how you're going to use it in a qualitative way to make your business even better is really exciting in my opinion. So when we talk about how you kind of apply the benefit and what our playground is, you do have the opportunity to go back to open tax years. So on the federal side, that's 3 years from the date of filing. And then on Arizona side, it's actually 4 years from the date of filing your return. So right now we're looking at the 2017 and likely 2018 tax years as far as you can go back to claim refunds for taxes paid in those periods based on the credits that you didn't claim already. So that's kind of our look back period. But the idea is once you do this, it is something that continues with you. It is not a one and done type of credit. I would hope it's actually something that becomes a part of your leadership strategy on figuring out how to use this to stop taxes and payments going out the door in the first place. So when we talk about cash flow management, it's one of two things: going back and claiming refunds, which is checks in the door, or stopping cash payments out the door by understanding what your credits are before you have to make those tax payments, which is nice too. And then, as we mentioned, the option to offset payroll taxes is one of the options. Again, they're kind of two separate programs, but there is the option to offset payroll taxes as well, and that's something that you can do. So from an optimization standpoint, again, something that excites me a lot is just being able to come up with a strategy unique to your business, figuring out ways to track and understand what kind of work you're doing on as proactive as a basis as possible. Again, when we talk about R&D activities, this can be beyond your core product offering. For example, I talked a lot of consulting businesses that, their main service is just consulting and working with people. But on the back end, maybe they're building a SaaS to facilitate that, or building an app to help facilitate that. If I talk about somebody who's creating like a supplement manufacturing company, they're creating the product. So they're doing a lot of testing on the actual supplements and getting those quality controlled and going through a process of experimentation on that side. But they also might have process improvements on the manufacturing side. So building in new tech, figuring out more efficient ways with better yield to build things. And then on the back end, from a product packaging standpoint, maybe they want to use more sustainable materials. Maybe they need to figure out how to actually package and crate things because of shipping requirements, to create more stable shelf products. There's a lot of things that go in that kind of bleed into different areas. So it's kind of exciting to just kind of vet through all the stuff that you're doing to figure out, okay, does that fit within the R&D category or not? And what else are we thinking of that might fit? Okay, so from the perspective again of industries, it's all over the board. So I definitely want to pre-disqualify yourself just if you're in an industry that I haven't brought up yet. The idea is there's multiple industries that are doing things that are unique to both the industry and unique to the business as its own unit. So manufacturing still remains to be one of the larger industries overall that claims the R&D credit, and that's for the product development side, but also the process development on the manufacturing side. Formulation, so that can be cosmetics, that can be supplements, natural foods, beer, wine, hemp, things that are being utilized in a way, again, that create newer, improved, different types of formulations. On the information side, software is huge. Hardware, new med tech. Arizona is bursting with a lot of different types of tech companies, but you do not have to be a sexy tech company in order to claim the credit. It's just more specific to what you're working on. It could be building out a pretty robust website with a backend client portal and having to experiment with different ways to generate reporting for your clients and or pull data from different sources, things that involve customized coding and or integrations. From the professional services side, engineering and architecture firms typically will use a process of experimentation perpetually. So civil engineering, flow engineering, software development, all of those things are part of it as well. Okay, so I would say, obviously we're in the middle of tax time, so happy almost 3:15. But if anybody is contemplating this for their business, I would just recommend having a conversation. I'm more than happy to set up some extra time to kind of dive into your specific facts and circumstances. Obviously, that's what's most important. I would say if, again, anybody is kind of kicking this around and they haven't already filed their 315 taxes, planning on extending is probably a great just overarching umbrella comment. It's always better to get R&D tax credit claims on an original return when possible. So if it is possible to have a quick conversation and just see if there's an opportunity there, I would recommend it. So just understanding again, you have the potential of claiming taxes in the past. So if you're listening to me babble on and are thinking, oh man, like 3 years ago, we had this huge project that would probably qualify. It's great to kind of have those conversations too before the statute of limitations runs on those years. And then again, R&D credits can be used to proactively plan and invest back into your company, into the growth of your business. Obviously, whatever you've done already, you'll want to make sure you don't lose the opportunity for picking those up, but also on a proactive way. Once the rules and the playground's understood more, you're able to critically think, prepare, and set up strategies that are unique to you in order to reduce tax payments going forward as well. So I'm sure I have a plenty more to say, but I don't know if now would be a good time to open up for questions, Faith and Josh.
Oh, I was on mute. We do have quite a few questions in the Q&A. I know you kind of touched on a lot of these subjects later in your presentation, but we can go ahead and go through those questions submitted. Let's see, our first question comes from Chuck. I assume that if the R&D we are doing is funded essentially exclusively by SBIRs, we are not eligible for this credit. Is that correct?
Chuck, thank you so much for that question. So I actually work with a lot of companies that take SBIRs as well. So part of the detail that I didn't get too much into, but that's relevant for this question specifically, is two things basically need to be true in order to claim credits when there's funding involved. So if the example was you were externally funded to do something for another organization and you didn't retain rights and you got paid for all of your time and material related to that initiative, there wouldn't be a credit for you to have. It would actually be the other body that could probably claim the credit. So the two foundational things that the IRS likes to look at is who in the relationship is holding the financial risk and who in the relationship is holding substantial rights. So a lot of the SBIRs that I look at and that we kind of go through, it's going to be set on the foundation that you as a business owner, you need to deliver something in order to either get that milestone payment or get the next payment. And then based on the contract, typically it's a flat fee that gets sent to you. I would say that we do look through these though. So for your specific terms, it would be important to look at it. But I would say if you're not getting paid time and material, if you're getting paid a flat fee, the IRS typically looks at that as if you have risk in the development, because you have to come up with a solution basically, regardless of how much time it takes. And then on the other side, from an IP perspective, most of the time, thankfully, the SBIRs are gracious in making sure you retain rights to the thing that you're developing. So if that's true, then that also checks that box off.
Excellent. Thank you, Tiffany. Again, I know I had mentioned you had answered this question, but we were getting quite a few questions in the Q&A about it. But regarding the limitation for the number of years that you can file for the R&D tax credit, if you would just repeat that information.
Yes, and this is worthy of repeating just because, again, it's something I get a lot. So there is no statute that limits you from being able to claim this credit for the rest of the life of your business. So on the back end, from a calculation perspective, if there's a year that you're not doing a lot of R&D, obviously you wouldn't probably have the spend to generate a credit that would be meaningful for that year, but you don't miss the opportunity to at least try. There's geeky tax limitations on the back end, just related to threshold and base calculations and things like that, that might limit your ability to take a full credit. But that's really more on the planning side. If you're kind of on the hockey stick trajectory, or you're continuously evolving and improving things, likely you're going to be able to take a credit every year.
Excellent. From Maurice, what happens when you are the software developer and designer?
A lot of mental things happen. Fires and explosions in your brain. No, I know this part. No, that's a great question. So I didn't touch on this too much in the presentation, but just depending on how you structure your involvement, how you get paid, how the business is actually structured, will kind of dictate what we can pick up based on your involvement. So there's different ways that you can kind of structure your business. So for example, if it's a Schedule C, which just means that you're running your revenue and expenses for the business endeavors through your personal return, actually that bottom line income that is shown on your Schedule C would be considered a wage for you that we can include in the wage part of the calculation. And that would drive a credit. If you have an S Corp and you actually take a wage, it would be that. And if you have a partnership and you get pass-through income and or guarantee payments that are subject to self-employment tax, that would be considered your wage. So from your perspective, you're obviously doing the technical work and running the ship. But the main thing would be figuring out how we attach expense to you. And then your time involved, again, in the ideation phase, the actual technical building phase, the testing phase of building out those products would be something that we would want to figure out how to optimize for you specifically. Hope that answers your question.
From Travis, for earlier stage startups who don't have paid employees yet have received grants and are conducting R&D, what implications do these credits have, i.e. no income, no payroll tax?
They're basically a good conversation to have to figure out if there's a way to structure it that you could get benefit now. The other thing that I didn't fully clarify is, say for this year, you don't have any employees, maybe you're using independent contractors, or maybe you're bootstrapping. Depending on where we can generate expenses, is if you can, even for 2021, say, generate a credit, you have the capability of carrying forward the federal credit for up to 20 years. And then on the Arizona side, you have the ability to carry it forward for 15 years. So from the perspective of timing of benefit, if you are doing work and if you have spend, you just don't happen to have payroll yet, then you could likely still benefit from a carry forward credit, or at least a conversation to figure out if there's a different way to structure it for you.
Excellent. Dan asks, you mentioned that the payroll tax credit is only for new businesses. How is that determined? And what if the business is older than that, but is newly located in Arizona?
Welcome to Arizona. Okay, so a couple things. Basically the starting point from a code perspective on what your window of time is and being able to claim the credit is just directly related to, in that business, when was your first gross receipt? And that could be your first dollar of interest income. Once that starts, you only have 5 years to be able to make this election. The intention of the election was to help incentivize businesses that were, on the wobbly knees, starting blocks of building a business. So from that perspective, that is kind of the parameters. The other things are just not maxing out 5 million in top line revenue. And then from the perspective of your max benefit, you're gonna, basically that's going to be driven based on your payroll up to 250 grand per year.
Excellent. Do R&D tax credits, at all impact a VC fund investing in a company doing R&D?
Very interesting. I'd have to look at everything kind of and how it flows through. But generally what will happen is, say it's a partnership and the VC fund is a partner. Depending on what is subject to tax and where it's subject to tax, it'll typically just flow down to whoever's paying tax in that endeavor. I would say generally, if you're investing in a company but not an equity partner in general, you're not going to find as much benefit, except for potentially, obviously, that cash flow benefit that happens by getting the recoup or the lack of cash going out the door. But from the perspective of just entity structuring, it'll just depend on where the flow down happens. For example, just typically like in a partnership that's owned by individuals, you're going to get the benefit at the individual level, not at the partnership level. Same with an S Corp.
Excellent. For a federal research grant that requires cost share, about 20% of the grant, we are able to claim the R&D credit just on the cost share part or the whole grant.
I guess I know that wasn't a live question, but I'll just need to understand a little bit more before I can answer on what the cost share part is and what that means for the rights. But please feel free to shoot me a note or jump in again with another part of that question.
Excellent. We have quite a few questions regarding specific businesses and if they qualify So before jumping into those individually, I know Tiffany has shared her direct information currently available on the slide. So let's take from Graham. I'm a web designer building custom WordPress websites for clients. Have you seen anyone like me being able to benefit from this R&D tax credit? Would love to explore this further if possible.
Yeah, that's a great question. And it kind of depends, like favorite tax answer ever. But again, I really like to kind of dive into the details because that will determine if you're taking which I'm assuming you're not doing because this is your business, but if you are taking like a template WordPress site and kind of just configuring it for a client, and there's no either customized coding or additional effort that goes into trying to figure out ways to make that different than what's inherently available in the actual template, it'll be a little challenging to qualify that. But I would say, if there's challenging projects, things that you're doing that involve customized coding and or integrations and or work that's being done to build out different types of modules, scripting, things like that, we can dive in and see if that's some of the activities you're doing.
Excellent. Now, Tiffany, for our small businesses who are interested in learning more, besides your information shared on the screen, who should they be contacting as a part of their team? Is it their accountant? Is it their tax credit expert? Who is that point of contact?
That's a great question. So I am a CPA and I'm sometimes called the CPA for CPAs because what I do is so specialized that usually I'll work directly with your CPA to get this portion of the work done, kind of like the medical model. But what I would say is, just as a general note, please always make sure to keep your eyes open for opportunities for your business. And I do make myself as available as possible to put you in front of different resources. I know the ACA is an incredible resource. Also, I don't know if this got shared as one of the links, but if you do go on the ACA site and look up the different incentive programs, the ACA refundable R&D tax credit program is, like I said, one of the better ones in the nation, but there's also a list of different incentives that you may qualify for. And then being able to kind of just dive in and ask additional questions to see if you fit within those parameters is always a great move, in my opinion. I do, Faith, just want to take a couple of minutes because the ACA, the Arizona Refundable Program, is one of those things that kind of made me fall in love with the ACA and Arizona in general. It's a very competitive program, but everything that I was talking about the R&D tax credits, the Arizona ACA Refundable Tax Credit Program for R&D is something that opens every year at the beginning of the year. It opens the first business day of the year, and it is really like the Wild Wild West to try to get part of the funds. But the opportunity for businesses to get a piece of that cash back is huge. It's a $5 million pool every year. And it kind of goes in conjunction with everything we've been talking about. You can generate a credit. If you're not paying taxes at the Arizona level, it's actually a check back as opposed to a carry forward. You can get up to 100 grand. And that is also on the ACA site with some more detail on how to qualify and how to kind of start getting set up. But just as a note for those intending to try to apply for that program, I basically have like a coaching program, even though it's not, it just turned into that, of how to get ready, how to get prepped, and how to like do it as fast as possible. So for anybody looking to do that for next year, it'll open again 2023. I can't believe we're there already. First business day of the year, and it takes some prep to get ready. So
no, fantastic. And thanks for sharing that, Tiffany. Again, as she had mentioned, those resources and additional information are available on the ACA website. And so you can learn more about the programs that Tiffany is discussing on that website. We did get a follow-up for the earlier question about the full grant. So following the cost share for research projects awarded by Department of Energy, it usually requires 20% cost share from the awardee. It could be either direct or indirect cost from the company as long as it serves the project. So when claiming the tax credit, do we still need to look into the details of the expenditure into the cost share?
Okay, I would still want to ask a few more questions, but that helps. So if you're going into a project and basically what I'm hearing and what it sounds like is you're going to have a certain level of that expense on your side, they're going to have a certain level of the expense on their side. The expense on your side, if it's still basically something that's covered that you're taking risk for, that would be kind of what I would want to look for. If there's anything involved with like an actual reimbursement of expense, direct reimbursement of expense, and that is your only and primary like cost towards it, then I would say no. But if there's additional time, effort, spend that's outside of those parameters, then we want to look at it. But I do think there's probably more detail there that I can give you a better answer. We have a quick convo, just so you know.
No, excellent. And thank you so much, Tiffany. I think a lot of the questions remaining are very specific to it. So as mentioned, Tiffany's information is on the screen, and personally speaking, I know she'd be happy to walk through and answer some of those questions for you. So if you are interested in learning more, and if this is applicable to your business, please don't hesitate to reach out. And as mentioned, additional information is available on the ACA website. We are right at time, so I thank you all for sharing those great questions in today's session. And of course, Tiffany, providing this great information. We're always happy to share the different resources that Arizona does offer to our small business community. And so taking something as potentially cumbersome as R&D, it's always great to have someone like you walk us through that process. So thank you again for your time today. So we will go ahead and wrap up today's session, but we hope you join us here next week as we discuss PPP loan forgiveness. So until then, have a great week, and we will see you next Tuesday at 9 a.m. Thanks everyone for joining, and thank you again, Tiffany.
Thank you. Thank you all.